Hi everyone, my name is Darryl Payne, CEO at As Good as Gold Australia, and I'd like to report that there's been some sensational events that have taken place overnight in the US bond market. The very important question is, what impact may this event have on Australia and indeed our whole banking system? I'm here with Chief Economist John Adams to provide some answers. John, could you please share your insights into this event?
Sure, Darryl. So what we've seen in the last 24 hours is that the non-farm payroll numbers came out in the US. The expectation by the market was 185,000 jobs, but the actual number was 230,000 jobs.
Right.
So basically a very strong jobs number.
Yep.
There were some other numbers around the strength of the services sector in the US. So clearly what we're seeing is a very robust economy under the Trump administration. What that actually did was it triggered concerns about more inflation coming down the pike. So we've had a breakout of inflation in the developed world. It's still in the early stages, but obviously more extreme in the developing world. And overnight we saw Turkey hit 15-year high inflation of 25%. So basically we had an increase in the number of jobs. We had the US Fed chair talk about his expectations that rates will continue to go up. So bond holders in the US panicked overnight, obviously with fears of inflation occurring. And why inflation is bad for bonds is that it eats away at the real value of the investment, the capital that's in the bonds. So we saw a big sell-off in US bonds overnight, and the yield in the last about 36 hours has gone from 3.05% to now 3.22%. So the interest rates have gone up. What that means for Australia is, the first thing is that because rates are now escalating in the bond market in the US, that's having an impact on the Australian dollar, and the Australian dollar as we speak is about 70.8 cents against the US. So obviously our dollar is taking a hit.
Yeah.
But the Australian banks, 30% of their funding come from overseas. Big chunk of that comes out of the US. So with the rising bond prices, particularly with the 10-year bond yield, that's going to represent that the Australian banks have to pay more for that international funding.
Yeah.
And obviously to keep their profit margins at a reasonable, healthy clip, they'll be forced to raise interest rates independent of the RBA. And that means that if you've got a mortgage in Australia with variable interest rates, you're going to be seeing further rate rises coming forward. Now, the other point is that among the prominent US sort of commentators, Michael Pinto, who's been on this channel before, was talking about the expectation that the yield curve would invert. And the reason why that's significant is that when the yield curve inverts, typically you have a recession and a market meltdown within 6 to 24 months after that inversion. There's been other people like Peter Schiff who says, no, we're going to see inflation, the yield curve will not invert, and we're going to see the spreads in the yields actually escalate. So 36 hours ago, the difference between the 1 year and the 10-year yield was about 0.49, and now the yield has sort of gone above 60 basis points. So what we've seen is bond prices fall, yields go up, the spreads are actually getting wider, which means that less chance of an inversion, and we're seeing concern in the market about inflation. And that's obviously bad for people who have mortgages, people who have debts, people who have money in the banks, because obviously we're going to see debt servicing costs rise. So that's what's that is obviously what is happening, and obviously that is going to be bad for mortgage holders who are on variable interest rates. But obviously if the dollar is taking a hit because the RBA will not raise interest rates, obviously if you're holding Australian cash, you potentially could be losing value with the events happening that are happening from the United States. So obviously, us being a gold and silver dealership, I mean, obviously for those Australians concerned about the value of the Aussie dollar and preserving their wealth, obviously gold and silver will hold their value no matter what happens with the value of the dollar. So we're seeing some big moves. Obviously initially we've only seen this for the last sort of 12 to 24 hours. We'll see what happens in the next few days. But obviously, when the inflation genie gets out of the bottle and people are concerned about inflation, you could see yields on these bonds, move very rapidly. Obviously in the days, the months ahead.
Quite unexpected in real terms. I mean, everyone was talking about interest rates remaining stable. If anything at all, we may see a decrease in interest rates, but overnight that can change. And it just goes to show, doesn't it, how quickly, how rapidly things can change in a volatile economic market that we're in right now.
Absolutely.
Yeah. John, this is, so basically what we're saying, and I will just confirm this, for those paying off a mortgage at the moment, they're not going to be too happy about this, are they? I mean, we're going to see, what do you think the increase in interest rates might be? Forgetting about the RBA at the moment, but independently by the banks, what do you think might happen?
Well, so I don't think it's going to be uniform. So each bank board and CEO will have to make a decision as to how much profit margin they want to be able to keep, knowing that the funding costs are going up. So I think we could be seeing an increase of like maybe 0.1, 0.2%, over the next 6 to 8 weeks, in terms of coming out of particularly out of the big four banks. So obviously those who don't have fixed interest rates are going to be seeing rates go up, and we know that there's about 30% of the mortgage market is already in mortgage stress. So if rates continue to go up, those households will be continually being squeezed.
Thank you so much for that information, John. It was great that you were here and we were able to respond to that as quickly as we have. And as usual, of course, we like to keep our viewers well informed. So we thank you very much, John, once again, and appreciate your input.
No problems.